This is the Daily Market Comment at xm.com by Rafi Boyajian. I'm Cristina Marujos. The week looks set to end on a positive tone as the midweek rebound in risk appetite received additional boost from robust economic indicators out of the United States yesterday. The U.S. scored a hat trick as the ADP employment report, factory orders, and the ISM non-manufacturing PMI all beat expectations, suggesting the American economy is far from a recession. A solid non-farm payrolls report due at 12:30 GMT today would further temper expectations of aggressive policy easing by the Federal Reserve, and markets will have the last opportunity to hear from the central bank before the next FOMC meeting, when Chairman Powell speaks in Zurich at 4:30 GMT. The dollar index came off one-week lows following the strong data as Treasury yields rebounded sharply. But the greenback's recovery was more notable against the safe haven yen. Meanwhile, risk-sensitive currencies such as the Australian and New Zealand dollars extended their long overdue gains versus their U.S. counterpart. Signs of progress in U.S.-China trade talks had also lifted the Australian currency as well as other risk assets on Thursday. The U.S. and China have agreed to hold high-level talks at the beginning of October. Global equities have rallied following the positive trade developments, with the S&P 500 breaking above its recent sideways range. British Prime Minister Boris Johnson faced fresh setbacks on Thursday after his own brother quit as an MP and as a minister in the government. Johnson had also struggled to convince opposition lawmakers to back his call for a general election. The government needs the vote of 2/3 of Parliament to trigger an election, but opposition parties are weary of Johnson's tactics and may not support calls for an election until after the Prime Minister has requested an extension to the Brexit date at the EU summit in mid-October. For now, though, investors appear to be relieved by MP's latest attempts to block a no-deal Brexit. The pound has soared by 3% from its three-year trough touched on Tuesday. The euro has also benefited from the reduced risk of a disorderly Brexit, as well as some doubts emerging about an announcement of a large stimulus by the ECB next week. This was today's Daily Market Comment at xm.com. Have a great weekend.